All right, good morning, good afternoon, good evening. Welcome everyone to the latest Productside webinar. Today we are talking about the Portfolio Scorecard, how enterprise product managers prioritize what matters most. We'll give folks a moment to join, but as you are joining, would love if you would kind of put in the chat where you're joining us from. And I will kick things off. I'm Roger Snyder, and I am in the Santa Cruz Mountains in California. Iowa. All right. Welcome, Benjamin. Georgia, Oregon, London. Fantastic. Welcome, Mike. Welcome, Krishna. We'll give people just another few seconds to join. Northeast Kansas. All right, Clint. Welcome. All right. Let's get this show on the road. As I mentioned, my name is Roger Snyder. I'm a principal consultant and trainer at Productside, based in the Santa Cruz Mountains of California. And I am joined today by our guest, David Nash. David, introduce yourself a little, please.
Well, good morning and good afternoon, everybody, and greetings from beautiful Porto in Portugal. Special greeting to anybody who's from Oregon and London, since I've lived in both places, one of them for a very long time. So
Hmm.
it's delightful to be back with my good friends from Product Side, and we're hoping we're going to have a great session for you.
Absolutely. Great. All right. So if a couple of admin slides to get us rolling. If you're not familiar with Productside, we have been in the business over 25 years. You may remember us as 280 Group. We made this name change a few years ago. And we're completely passionate and obsessed with helping product management become more effective in organizations, helping product managers accelerate their careers, and we like to work on transformations. We love to partner with companies for multiple years and help them really transform the function of product management in their organization. We are also pride ourselves on tailoring our context to your business, to your needs, your current circumstances, whatever they may be. And we have a great team of invested experts that help you bring to life this transformation. Now, we want this to be an interactive session, so please ask questions. You can use the little Q&A, I believe, button is it at the bottom in order to give us some of your questions. Yes, there's a nice Q&A button there. Check that out. Please put your questions in there. We'll either take the questions live as we're talking, if it kind of makes sense to answer that question in the moment, but we'll also reserve some time at the end of the webinar for us to handle the questions as they accumulate during the conversation. All right. We also have a great community on LinkedIn, and we encourage you to join this community. Over 40,000 different product management professionals are there, and they're talking about the matters of what matters today. What are the things that are going on in the industry? What are the challenges they are facing? What are some of the wins that they're having? So please join this group, be an active participant, and you can become part of a large and vibrant community that is about, again, advancing the value of product management in organizations, advancing product management careers. All right, enough of our admin tasks. Let's talk about today. Here's our agenda. We're going to talk about why enterprise product management requires a different way of thinking, a portfolio way of thinking about products. We'll talk about how to better understand your portfolio, looking through several different lenses, and then building a portfolio scorecard that becomes a tool for conversations, a tool for making effective and strategic decisions. We'll then talk about the fact that you got to bring along everybody on the journey. How do you rally sales, finance, and engineering? And then we'll also talk a little bit about how can you enlist AI as your portfolio assistant. We'll give you some good practical tips there. And then we'll have a good live Q&A with David and myself to help answer your questions. But we want to first understand you a little bit better. So we'd like to run a poll. First of two back-to-back polls, in fact. So first we want to understand your role. What's your role today? Are you a product manager? Are you maybe an aspiring product management leader? Are you already a product management team lead or director, or maybe you've a product management VP? And if you're a VP or a CPO as well, go ahead and check that box too. would love to know what kind of audience we have today.
Thanks for doing this, everybody, because we always know who registers, but you never know who's going to show up.
That's
So
right.
this really helps us out.
Absolutely. It's important to know the audience that we're working with at the moment in real life.
Good. We have a couple of product management leaders here as well.
Hmm.
Aspiring. Good. Well, you came to the
Excellent.
right place.
Excellent. All right, let me end the poll and share the results. Yeah. All right. So the sweet spot is team leads and directors with another dose of VPs. So a total of over half the group are product management leaders today, but we've got a nice group of product managers and aspiring PM leaders as well. So that's great. Thank you very much. And then the second thing we'd like to understand is what kind of company do you work at today? Love to understand that. So are you kind of in the early startup phase, late startup, growth stage, enterprise, or maybe even large enterprise? So let's run that poll and see where you all are in terms of the size of the organization that you're working for. There we go. Here comes the poll. All right. Excellent. Got one late startup, but most of the folks are coming in right in the area that we think is going to be the sweet spot for our
Oh, this is
conversation
really
today.
a good fit. I'm
Yeah,
so glad that
absolutely.
the people we were aiming for showed up. This is going to be really
Absolutely.
good.
Yep. This is great. All right. So enterprise at the center and large enterprise. So over 70% of the folks in our audience are from either enterprises or large enterprises. Excellent. This is going to be a great conversation. All right, David, I'm going to turn it over to you now and let's talk about why enterprise.
All right, let me see if I can get this poll off my screen. Here we
Oh,
go.
yes, of course.
All right. Well, again, good morning and good afternoon. We're straddling a few different time zones here. It's a little after 5 p.m. in the afternoon
Hmm.
where I am. And it's actually a good icebreaker because just a moment on me, and I'll try not to bore you to tears. So I've been in this product game a long time, perhaps like several of you. And I too have worked in kind of every construct, from startup, private equity, venture funded startups to growth phase companies, and a number of large global enterprises as well. And a lot of the things that we'll share with you today are lessons that no one ever taught me. I had to learn myself the hard way. So we're going to try to spare you from having to go through that as well. But one of the epiphanies I had along the way is that, what got me here to the current role, I got recruited to take a couple of big jobs that I wasn't always ready for. By the way, if that's happened to you, you're in good company. And I had to
Hmm.
learn a couple of things, seat of my pants. And one of the biggest deals I had to learn was challenging some of my assumptions about what it was like to work in an enterprise product organization. And
Yeah.
we'll get into this in a little more depth in a minute, but the game changed. Once you got out of, I have a product or two, I've got maybe a $50 million business or a 50 million pound sterling or euro business. But now
Hmm.
I'm working on several continents, and also uh, there wound up having to be a bunch of balls we had to juggle. And as I grew up from an individual contributor into a product leader at various stages and then into an executive, I had to learn some of these lessons more than once. So Roger, if you'll roll ahead, uh,
Yes, of course.
that's really what I want to share with you today. So just a quick juxtaposition. And again, we're not really targeting most of today's session at rank and file product managers. So those of you who are moving into a leadership role, or as the survey indicated, already are in a leadership role, these should look familiar to you. When you work at a small company, it's you. It might be you and the CEO, right, who's calling the shots on the product, but you have a lot of agency. You have the law of small numbers working for you, so every win is a good win. There's no bad customers, right? Everything is, you throw stuff at the wall, see what's going to fit. And AI, by the way, has only accelerated that today, right? You can build stuff a
Hmm.
lot more quick, a lot quicker now. But a lot of the questions of let's just get product market fit. Let's find a core group of customers who love our product so our investors can gain some confidence that we're going to be around, right? We're going to survive our funding. We're going to get to the next round and maybe an exit. That's what that game is all about. As you get into the mid-stage growth phase companies, and I did this for years in the US and in London and here in the continent, uh, B2B and enterprise SaaS businesses, which were generally private equity owned. The game changed there again. Now you had a bunch of products. You had your legacy products, which got you there, but you probably acquired one or two products along the way. Sometimes you acquired a competitor, you acquired someone with complementary expertise, maybe out of the channel. And here, our role as product managers and as product management leaders went up getting a lot bigger. Individual PMs may have had a little less agency, right? And maybe a little less freedom to operate, but the leaders were expected to just know a lot more stuff and be able to call shots. Here you had to maintain product market fit for the thing that your company started from. You had to establish that for any new products. And here you were challenged to expand the business because the reason that private equity company invested in you was to get a 10x return on
Right.
their seed funding, and they were willing to wait. They say 7 years, but really they'd like to sell you as early as 3 or 4 years after, into the whole period. So I've been through that as well. And then the last few years, interestingly, I started my career at Intel, back in the day, the glory days of Intel, really big multinational company. I went smaller for years, and my last full-time role in the UK was also for another large publicly traded company. And here, very different again. Here, you probably no longer had private equity or venture capital shareholders. Here, you had public shareholders. That might be pension funds or institutional investors. But their expectations again were not around explosive growth necessarily, but they were around predictability, right? They were about, we don't like surprises. As anybody who looks at the street knows, Wall Street's not a big fan of surprises. And so here it was, yes, we'd like to see growth, but we really want kind of steady she goes. I want earnings. I want a good, strong business that people will invest in for the long term. So again, our role as leaders, and I was a chief product officer here for several different runs of this, predictable, profitable growth. So we're still doing product, right? We're still trying to win the hearts and minds of our users, but we are trying more than ever to win the hearts and minds of our investors along the way as well.
Yeah, that's a
So
really
just
good
real
point,
quick,
dude. Yeah,
real quick,
really, really
Jeff.
good point in terms of the audience that you're serving now. When you're this size, their needs change, and you have to be thoughtful about that. We got a question in the chat. Is this what happens when you need to feed an extended family of products? And I think, Dean, that's correct, right? We need to shift our thinking. A product management leader shift our thinking up to, all right, we've got this whole family of products, as David was talking about, some through acquisitions. So it may actually be a rather interesting mixed family, like many of us have in real life as well, right? And who are we going to feed and how are we going to make those decisions? Really, really good point.
Yeah, for sure. So if I had to boil it down to two things, and I think some of you can probably know what this feels like up close and personal. When you got into a large organization, drop a comment in the chat if it felt like, oh my God, I finally have the big job. Why can't I make any big decisions? Why does it seem like the more I got promoted, not only do I not get more greater agency, I got less agency. So that's thing number one. Thing number two was so much friction, right? How many meetings have you walked into as a director, VP, or a chief anything officer where it seems like you can't make a decision, or if you make a decision, you can't get it to stick, or it takes forever to approve things? It's almost as if there are people in your company whose job it is to just say no,
Right.
right? And that reads its friction, it reads its frustration. But really, the idea here is you have to change your thinking, right? From what worked in smaller companies, which was, I need to get my thing approved. My thing is awesome. Here's my child. Here's a great business case. It's the sharpest, they're the sharpest kid in their class. Look at all the virtues of it. Look what we're going to do. Why won't you just approve my thing? And if you can free yourself from that transactional approval mindset into, we have to constantly bring our stakeholders along with us. And only when you do that over and over again do the antibodies start to relax a little bit. So
Right.
oh, I think we just popped into, oh, there we go. Okay.
Sorry about that.
So continuous alignment versus transactional approval is a very big deal. And then, as I think Dean said a couple of minutes ago, it becomes far less about product X, Y, or Z, and it becomes a lot more, just like your financial portfolio or the portfolio of foods you eat, right, for a balanced diet. It becomes much more about the goodness of the whole. And sometimes you have to do things which don't feel great, right, when you're optimizing for the whole, rather than an individual product. And you'll have your product managers come to you and advocate and not know why, they can't get that extra dollar of investment. And maybe they can't because it's not the best thing for the company's overall portfolio in that moment. So that's what we're going to kind of pull back the covers on in the next few minutes.
Yeah, good point. Yep. Yeah, so it's like you said.
Yeah, I think we actually said that. So
Yeah,
yes, it's
very
not
good.
just about the food on the plate, it's the whole meal.
Mhm.
So this is really the essence of the rest of today's session. It's understanding the portfolio, and portfolio, you know, it's a catch-all term. In our case, we mean the collection of assets that you have that you're bringing to market. Some of them are customer-facing products. Some of those are internal tooling. And basically, for every dollar that your board or your executive team gives you to invest in your product, some of that may not show up in end user facing things at all. It may go to some other
Right.
very different kinds of investments, which are in your portfolio of what you can do with that dollar. But that's where we need to get to very quickly. So if we can roll forward, Roger.
Yeah, great. Let's do another poll. We would like to understand also,
Perfect.
right? Like to understand also how many products are in your portfolio. Since we do have a majority of product management leaders, we want to get a sense from your leader, from you all about how many products are in that portfolio that you're working on right now. So is it just a few, less than five, six to 12? Or now we're talking about product lines, three to five product lines, six to 12 product lines, or maybe 12 plus product lines or over 100 products. And we've got several people weighing in on that choice as well. And this is great. So we
Well,
want to
I
learn
found
more.
my tribe here. You guys are definitely my people.
And this is with only 55% people responding. We'll get a few more responses.
Okay.
Leave this open for another few seconds, see if we can get more people to weigh in. And then we'll take a look at the data. All right, folks, find that poll, choose your option. Want to get over 60% of you telling us how big your organization is in terms of products. All right, well, let's end the poll. Here we go. Share the results. All right, so we've got kind of a dual mode on this one. 38% of folks said they have 6 to 12 products, which is still enough for portfolio management to matter for sure. And then we've got a nice large number of 25% of folks saying 12 plus product lines or over 100 products. Love it. All right, let's keep going then.
Well, you're in good company. Just a quick war story. Well, just to have Roger going into the slide. My last company that I worked for in the UK was a publicly traded company called Dine Durham, traded on the Toronto Stock Exchange, about $500 million company, and we grew by crazy acquisition. In the time I was there, we acquired over 30 companies in under 24 months in Canada, all across Canada, in the UK and Ireland, in South Africa, in Australia. And that was one of the things that attracted me to the job because I'd worked for acquisitive companies before, but that was off the charts, acquisitive. And it was
Right.
a really, really interesting problem set that I was really drawn to. So with
Mhm.
that, Roger, over to you.
Okay, great. So we're going to go through 5 dimensions of 5 different lenses, if you will, of thinking about your product portfolio. And the first one is to segment your portfolio by growth versus your market share, right? So the x-axis here is how strong are you in this market? Are you a dominant player with very high market share? And I want to point out that the axes on this are on the x-axis in particular is reversed to what you might be used to. So high is over here on the left. All right, just want to make that clear. Okay, so if you are the 800-pound gorilla in the marketplace, you have dominant market share, then you're over on the left of this slide. Okay, and then in the y-axis, we're talking about the market itself. All right, so this dimension is about you. Okay, this is all about you. How strong is this particular product? We're talking about an individual product or product line. How strong in that product line are you in terms of that market? Okay. Over here, now we're talking about the market itself. Is the market rapidly growing? Say, like AI right now, or mobile 10, 15 years ago, right? Is the market pretty stable? Like, are you in the business of tractors or toilet paper where, the market is pretty darn stable. It's not growing very much. You could predict the growth very easily, and it's a low number. Okay. So those are the axes. Now, this is the Boston Consulting Group growth share matrix. And what they did was, and this is actually a fairly old but very respected matrix that helps you categorize your products into four categories. All right. So in the upper right, where I want to start, when you have low market share, but the market's growing fast, question marks. There's lots of opportunity out there, but you don't own much of that market, but you want to get into it. So you launch products, and these are your question mark products. Then I want to kind of actually move in this direction. So we start with question marks. We're anchored here. And then I want to move over here to the stars. Okay. Now your share's growing. You're onto something. You've got a product that's actually gaining market share. That's where the arrow is pointing. You're gaining market share. You're becoming what we like to call a star. Now you've got significant market share, perhaps even dominant market share, and the market is still going like gangbusters. We call that a star. All right. That is a star product. Pretty awesome. Now, every market has its peak, all right? And at some point in terms of growth, it starts to slow down. And as that market slows down, if you also maintain your market share, you then hopefully move from a star to a cash cow. And the cash cow, you're still dominant in the marketplace, right? You're way over here. But now the market itself is slowed down. It's mature. It's good. There's great recurring revenue in this market, but it's not growing as quickly. All right. But you've got your established dominance. That's the cash cow. Now, the ideal situation when you launch a new product to get into a new market space is that you follow this path. All right. Question mark to star to cash cow. That's the ideal situation. Unfortunately, this fourth category is what happens when a question mark just never quite gets to cruise velocity and you drop down to being a pet. Or you're a star for a while, but then someone else comes in, disrupts the market, and takes over the leadership position. And then that also means that your market share starts to decline and you move to a pet. And then lastly, even as a cash cow, you can eventually start sliding if somebody else figures out the change in what the market needs and serves it better than you are. And then you slide down into being a pet. So here we're talking about low market share and low market growth. Those are pets. Okay, so I've explained the model. What's the point? What's the so what? Of every model, you got to know what the so what is here. Here, you want to make sure that you understand where you fit, where your product line is right now. And then at a portfolio level, you want to make sure you have a good mix. All right. You want to have a few products in each of these categories, right? I've got product one and product two here, maybe product three. I'd hopefully have a couple of really good star products. I definitely want a couple of cash cow products. And the cash cow products have the revenue and less maintenance work typically because you've now established that you're providing good value and you don't have to keep incrementing on that. You can then take those profits and feed your stars, feed your question marks with that revenue. And unfortunately, you probably will have a couple of products over here as well. And those are products that over time you should probably sunset, probably get rid of. And a quick story, David, before we move on. I did get to follow this path once, just canonically, all the way through this. This was when we were enabling the wireless internet. We were actually laying the groundwork for smartphones. And I ended up running a $100 million business. It was one of these cash cows. But I had a long list of innovations that I wanted to continue to throw out into this product. And then my director, I was a senior PM. Well, I guess I was a director and then there was a VP. The VP sat me down one day and said, Roger, you're not playing your role. I'm like, what? What do you mean I'm not playing my role? I've led this product all the way up here and made it a great success. Well, yeah, that's great, Roger, but stop asking for more resources. It's time for us to take all the money that you're bringing in and feed the other products that we need to start up, the new products that are going to address new problems in the marketplace. And we've got a couple of stars that we've got to give more fuel to so they can actually rise even higher. So you got to understand your role. And it was really a disappointing day, but also a very good learning day for me to recognize, all right, I have to shift my thinking about my strategy for this product. Keep it in that cash cow position so it can feed the rest of our product line and the rest of our product portfolio so we can be successful in multiple dimensions. Hard knocks day for me, but a good learning.
There's another, if I could piggyback on that for just a moment,
Yeah.
Roger. There's another very quick war story because we learned so much from them. I was VP of
Hmm.
product years ago at a company called ADP Dealer Services, became CDK Global, big supplier in the OEM automotive field in the US. And we had a lot of products that we call long tail products. These are products that have been around forever. But if you looked at the revenue breakdown, it really did go down to a very low amount. We had a handful of customers on each, and these were their pet products because so and so, who is now a senior executive, that was their product back in the day. And they couldn't make the decision that, this thing really has to be taken out behind the woodshed, so to speak.
Right.
So you have all kinds of reasons, but I went on a slash and burn for 2 years at that company.
Oh,
And I had to be the guy to do the stuff that no one else wanted to do, which
right.
was to let those customers know that their belated elderly product led a wonderful life, but there's a better version for them.
Right.
And we did publicly traded company. We brought 150 million US dollars to the bottom line by
Hmm.
just turning those products off. So it's
Right.
kind of the ugly underbelly of product when you have to do that because we came into product because we like creating new things, but sometimes you have to go nuke the garden, with a ton of
Sure.
pesticides and just kill all the weeds and start over on some things. So
Yeah.
if you walked a mile down this road, it's not easy, but it's very necessary.
It's no fun for sure, but it is necessary, and you're actually playing a valuable role as an executive when you make these hard decisions.
Amen.
Yep. All right, David, I'll turn it over to you for the next couple dimensions.
Yeah, thanks, Roger. So we're going to switch gears a little bit. I want to talk very briefly, so we don't take too much time from the rest of our slides, to talk about the notion of kind of a strategic inflection point that your companies will go through at some point. And this is less about individual products and more about, hey, the fundamentals of our business, which made that business very attractive, have shifted. And these are tectonic shifts that maybe only
Yeah.
happen once in the course of a company. I lived through one of these at Intel. I was at Intel for about 18 years. And Intel, for the historians out there, long before there were microprocessors, Intel was a DRAM company. It was
Right.
founded to make DRAM back in the day. And Intel became a very successful DRAM provider. Somewhere around the mid 80s, to Roger's prior slide, the DRAM market was mature. Intel had a lot of share, but we could already see that Intel was moving into a very commoditized business. We would no longer be able to command premium pricing, and the writing was on the wall. Intel had at that point invented a little microprocessor called the 4004 that they sold about three of. No one bought them, but the idea that microprocessors would be really big someday was a bold idea. It was a few years in the future, but Intel did a complete pivot, right, from selling DRAM and backing out of a very large market that they
Hmm.
ruled the roost in into a speculative thing, which became the next thing. There's a very similar story, of course, to those of you who are old enough to have ever gone to the mailbox and gotten DVDs in the mail from Netflix long before streaming. Uh, Netflix ruled the roost on DVDs. They were the last company standing, but they saw the writing was on the wall.
Right.
So just as video rental stores closed, streaming was on the cusp, and they completely did a hard pivot. Now, sometimes you don't see these until years later, right? So
Right.
when this is happening to you, it's a leap of faith. Takes a bunch of research and it takes some real dedication and alignment because it's going to be very, very uncomfortable, right? To start turning your battleship in another direction. But it's essential to the rest of the discussion of doing things which may feel uneasy in that moment because
Right.
you are, if I could bring the ever famous Gretzky playbook in,
Mhm.
you have to go to where the puck's going to be going. Allbirds announced with a lot of flourish 6 months ago that they
Yeah.
are abandoning shoes and going into AI. The jury's still out and whether that's going to mean anything, whether it's going to be, they're going to go from something big to something even bigger or not. But anyway,
Right.
just a quick view on strategic inflection points, recognizing them as a leadership team, and placing some bets, perhaps using the BCG framework Roger shared, even though it may take a little while to grow into that business.
Right. Good combination of those two things. Yes. All right. What's next?
So the next thing, and I think one of the most important things we'll talk about today is that moment in the product manager's life or the product manager leader's life where they have to learn a lot more about accounting and numbers. When I grew up in product, we were told that we had to win the hearts and minds of users, right? Whether it was through ethnography or whether through UX, that we cared about our users and we let the salespeople care about, the actual buyers. When you get to the level that most of you are at from the survey responses in larger
Mhm.
companies, you are expected to really understand not just how to grow top line revenue and how to sell the next unit, but how to use your product superpowers to make sure that you're not just earning more money, but you're keeping that money. And the leaky bucket metaphor here is a very common thing because as we're growing through startups, we do things in order to gain product market fit early on that may be inefficient, right? We don't care that we have too many people touching this. We don't care that there's too much friction in our process. When you get into a growth stage company, you have to provide, as we said a couple of minutes ago, growth while taking out cost. But at the enterprise level, I've spent years just wringing the cost out of things. And
Right.
seems like a very non-product management kind of thing. But I can tell you the people I've hired over the years and the people I've promoted over the years into senior leadership roles, these are people who excelled in really understanding, and we'll get into the language of your investors in just a moment. But this notion of cost to serve and operating expenses is a very powerful set of swim lanes, to use to
Mhm.
organize your product portfolio. So here are some quick examples. Uh, if you're doing B2B SaaS, you may still have a team of human beings, right, who stand up your product, who go and implement your product, to provision it, to get your customer data into the product. Uh, B2C companies, probably not as much, but B2B, that's still the norm today, even in mid 2026. So until your customer is online and they have their first 100 users in, you're not getting paid, right? So this notion of contract to cash is important. Even if they've
Mhm.
signed the PO and they're leaving their last vendor and they're going to marry you at least for the next few years, you don't get paid until they're on the air. So anything you can do to help shorten that time, shorten the expense, the number of errors, and the overall friction in getting your customers onboarded is super helpful to the bottom line. Your implementation team may ask you, they may complain about why do we always have to do this data cleanup on XYZ or this transformation. The best of us don't wait to be asked. We go looking for those problems. When I was at Board, a company based in London and Italy a couple of years ago,
Mhm.
we grew up as an on-prem. I know some of you were chuckling because some of us grew up with on-prem products that our
Right.
investors expected us to move to the cloud, right? So not just a SaaS business model, but SaaS, architecturally, SaaS mechanically. So we did that, but because we had acquired a couple of different companies, we had stuff in AWS, we had stuff in
Mhm.
Azure, we had stuff in the Google Cloud, and it was kind of helter-skelter. We had no economies of scale. And so what we did at Board was actually several different things. We renegotiated our cost with Azure. If you're a Microsoft Azure user, you'll know they have something called a MAC, which is the Microsoft Azure commitment contract. We renegotiated our pricing there. We simplified our cloud pricing. We found a way to park our customers' workloads that we're using a lot of resources. And the beautiful part about this is it increased our gross operating margin by 3 full percentage points, right?
Wow.
From the high 80s to the low 90s, which was
Right.
a huge deal for our profitability, a huge deal
Mhm.
to our private equity investors. And the best part for product people is this cost zero engineers, right? This was all like basically negotiating. And we didn't have to like take a development team and spend 6 months building a new thing. So it's a great example of focusing on not just earning money, but keeping money. And the other thing you'll need to do, if you've been around the block a couple of times, is at some point deal with your pricing and packaging. That's a huge topic by itself, too big for today.
Right.
But adjusting your customer side pricing and firing unprofitable customers are all things that take little to no engineering and can help the product leader have an oversized impact on the business. In fact,
Absolutely.
as the green call out says here, of all the things we can do as product leaders in a large organization, I challenge all of you to go off and find some place where you can actually increase your operating margin. Because if you do, your CEO, your CFO, your investors will love you, and you will absolutely fundamentally change the trajectory of what the company's doing financially. So I'm
Yeah.
going to stop preaching. Big topic for another day, but this one I've lived in spades over and over again. And again, for those of you who hire product managers, you should be interviewing for this.
Yeah. No, good point. Good point. All right. So the other side of this, in terms of financial metrics, are unit economics. What does that mean?
Yes, another huge topic that I've jammed into one slide for you guys today in the interest of time. But a couple of things. If you are private equity owned or venture owned or even a large institutional owned publicly traded company, unit economics are basically no more and no less than how are we measuring per unit of what we do our financial performance. And there's a bunch of them, but there's four big ones here. But before we get into them, what I can tell you is that there is nothing, full stop, nothing more important to drive the valuation of your business that your investors will, look to judge you by for your next round or for your exit than your unit economics.
Hmm.
So not only do you need to know what these are, but you need to know what good looks like. So what I've done here is I stole a page out of a document we did several years ago. The numbers are a couple of old, but are a couple of years old, but directionally they're still 100% on target. So they are growth. And a couple of years ago, when money was cheap, companies, didn't care about profitable growth. This was the old, pets.com.
Yeah.
We'll gain customers and we'll figure out how to make money later. No,
Right.
those days are
No.
long over. So profitable
Hmm.
growth, not growth at all costs, is still the single most important thing. The next thing, if you're an enterprise customer, particularly with the portfolio, as Roger described, is not just keeping your customers, but growing your customers. Your salespeople will call this expansion.
Hmm.
And when we talk about churn, gross churn is obviously can be no greater than 100%. So if you have gross retention in the high 90s, that's great, right? So you're
Hmm.
losing less than 10% of your customers, partially or in whole. But net retention is how effectively are you growing those customers? Selling them the next application, the next use case, the next seat, the next department, whatever. So NRR is huge. Good looks like 125% is what the top quartile B2B SaaS providers were doing a couple of years ago. Profitability, again, these include all kinds of things. I won't go into details now, but again, a great topic for another day. I've published
Hmm.
stuff on this, by the way, on LinkedIn. Go take a look. I'd welcome your
Great.
comments there. But this is
Yep.
all stuff that will make your CEO, CFOs, and investors' hearts sing. If
All
you can
right.
talk to earnings, if you can talk to operating margin, free cash flow, again, profitability, 82%
Hmm.
gross profitability on these dimensions is what the best are doing. And lastly, if you when you work with your sales team, it's the how, what's our cost of sales? How efficiently are we adding the next deal, right, in the pipeline? So these are also often multi-year targets. So you might have a goal, for example, from your CFO that says we have to increase our NRR by 3%, between this year and next fiscal year. That's not uncommon. So from a product planning perspective, your challenge is to figure out how you're going to start, with those 2 or 3% in mind and take the steps which will start to move the needle, right? Because of all the momentum and all the inertia this year, this month, this quarter, so you can have the final result you're looking for next year. So unit economics 101, this has to be your best friend. And the people who do this can unlock an incredible amount of impact, not just in your company, but within the investor community outside your company, which will probably lead to your next cool career gig.
Right. No, good point. The only thing I'll point out on this slide is, and this is great real data that you brought to the party here, David, is these are the right targets for B2B SaaS. You
Correct.
for your own industry, wherever it may be, the numbers could be dramatically different, but get what those benchmarks are so that and talk to your manager, your boss, the CPO, and make sure that you're on the same page about what the right goals should be.
100%. Another dimension of segmentation is ICP, or ideal customer profile. Again, a deeper topic for another day, but for today's purposes, there are several dimensions of ideal customer profile. And the idea, again, is when you get to be an enterprise organization, you have grown probably by never or very rarely saying no. to something that a customer asks you for. And so
Right.
this is why enterprise products are needlessly complex, why there are 27 ways to run the same report, why there are, 10,000 levels of permissions and granularity for authorizations and authentications to get in and out of the product. So at some point, you have to really understand who is the ideal target, who represents a customer with a set of needs that we are most able to serve.
Hmm.
And it's not easy, but it's well worth doing. You should be
Absolutely.
doing an ICP exercise with your sales and marketing team at least annually.
Hmm.
Otherwise, you're going to be selling to all kinds of customers who may buy your product, but they're not going to stick around because there's
Right.
going to be some key thing that they need that you're not going to deliver. Your sales organization loves this clarity, right? Because they're coin operated, your sales force. I say that lovingly, right? But they want to get paid. And for
That's right.
them to get paid, they need to know who to call and who not to waste time with.
That's
So
right.
as a product person, they're not expecting this from you. But when you work with your chief revenue officer or your head of sales, if you can bond and turn them into an ally between the two of you, you can get your sales force really aligned. Make sure that your sales teams, whether they're hunters or farmers or your renewal or retention team, that everybody's focused on the right part of your portfolio. And again, here again, you're going to have to probably have an uncomfortable conversation or two and fire a customer or two that's still
Yeah.
paying you. But this ICP deal is huge. Work it out. It's you. Tomorrow is not too soon to flesh this out with your marketing and sales partners.
Absolutely. I want to keep going because we got more content.
Yeah, yeah, yeah. The next one, I think the final big topic for
Hmm.
today's segmentation is around technical risk. This is one of my favorite cartoons of Whistling Past the Graveyard. We
Hmm.
have all done this, which is, where our CTO or our head of engineering is saying, that code, it doesn't really work anymore. We are one InfoSec vulnerability away from lights out. All of you. Have a list probably longer than your arm of things you should be doing. So my challenge to you all, from a segmentation and a portfolio management point of view, is to make sure you know from a risk assessment, what's the likelihood of this bad thing happening and what's the impact to the business. For example, if we can no longer get support on this database engine or this middleware or this key driver, which still works, how many customers are we going to lose? Well, what size crater will that leave in our business? And
Hmm.
this allows you to, really grade things on a very simple spreadsheet again of likelihood versus impact of what's green, what's yellow we can ignore for a while longer, and what's red. And for the stuff in red especially, you must dedicate engineering resources to this, right, before the unthinkable happens. A quick page torn out of last week's news. Those of you who know about Mythos and
Hmm.
the fact that Mythos is now finding bugs in Windows, in Google Chrome, in things which have been out there for decades
Right.
that their providers never knew existed. So
Yeah.
here's a
Amazing.
segmentation uh, exercise, which came out of the hypothetical into the very real here and now. Started about a quarter ago, but we started hearing about it about 30 days ago. So
Hmm.
just a quick example, sit down with your CTO. You have to be their defender, and you must absolutely ensure that you have adequate resources reserved. All the other segmentation discussions notwithstanding, to make sure that you can provide resources that are necessary to prevent these horrible things from happening.
Yeah, absolutely. Great example. All right, so now I'm going to take a turn at talking
All
about how to
right.
pull all of this together by building a portfolio scorecard. All right, we've taken 5 different takes on how to go at segmenting our product portfolio. Now we want to bring it all back together again, right? And so these are the 5 things that we were just talking about, right? Your portfolio position, your strategic fit, or if there's a strategic shift that needs to happen, the financial metrics, your ideal customer profile alignment, and technical risk. And really, I want to spend more time just talking about it from this perspective. You pull it together into a scorecard so that you now have one transparent way that every individual product manager, but also every salesperson, every marketing person can see this is how we're going to look at our whole portfolio of either product lines or products and evaluate what's our next step. What should we be doing? Which of these products from our earlier conversations are the ones that we need to take out behind the woodshed? Or which are the products that we really should spend more time investing in because they look like they're promising? Or which one is where we want to tune our cost savings and potentially goose that product from being a star into a cash cow because now we've created a lot more margin out of that product. And unlike other scorecards, this is not a scorecard where you put in these 5 columns and then you like assign a 1 to 5 value here and say, okay, add them all up, multiply by weights, and boom, we have a number. This is a scorecard for looking at and thinking about the big picture, right? This is where you want to actually have conversations, all right? So that you can get to the idea about, well, what is our next move, right? Because there can be conflicts in here. There can be opportunities where, okay, we've got 2 cash cows, but we can only invest in one of them. What are we going to do? And you only get that sense when you start actually plotting this information together into a scorecard and having conversations about them. That's this kind of scorecard that we're talking about here. So you put the key things, and in my example, we put in gross margins, and the NRR, but maybe it's other dimensions. What's most important in terms of your financial metrics? Is it unit economics or is it the cost savings? Or maybe it's a mixture of 2 or 3 of those variables. We chose unit economics in this example. But you put this all together and you then have thoughtful conversations about, all right, how are we going to really be thoughtful about what we do next with our product portfolio? Where are we going to invest? Where are we going to cut? Where are we going to maybe play the middle row here for a little while and just give this a little more time, particularly with question marks, give it a little more time to fund to prove. Okay. So I hope by pulling all this together, you now see what the point is. We want you to think about your whole portfolio of products in a transparent way that everybody understands how are we keeping score. And then when decisions come down like the one I had from my VP years and years ago, he said, look, Roger, you're doing the wrong things. You have a cash cow now. We're just going to milk it, right? Stop asking for more dev cycles, right? You're going to maintain the product. You're going to make sure we're on top of tech debt, but otherwise we're not innovating in your product anymore. But I didn't have this scorecard. I didn't get the big picture. And when you do this, when a CPO sits down and does this work with their product team leadership and makes this apparent, now everybody on the team, not just product management, but the rest of the company, understands how we're keeping score and what we're going to do next. Very, very powerful communication technique. Anything you want to add, David, before I move on?
Yeah, just that, and this bears repeating, and we'll say it again just before we wrap, is that never become a prisoner to any spreadsheet or template, not even ours, right?
Right.
And so the point that I would make, just to amplify what Roger said, is that this is not going to be your Ouija board that tells you what to do and what not to do. What
Right.
this will do is this will put things in your face and in the face of your colleagues who make these decisions with you. It will have you challenge yourself. It'll have you come up with good questions. And basically, it gets everything on the table so that you're making decisions based on data and based on strategic alignment, not based on what feels right in that moment.
That's
So
right. Good.
don't become a prisoner to this, but use it to provide guidance and clarity in your discussions.
Absolutely. So quick plug, if you are liking what you're hearing, we have more templates to help you become more strategic as a product manager. So point your phone at our QR code or use the link that will show up in chat and grab and download our strategic planning for PM's playbook that allows you to bring together the right set of questions, the right set of thinking to become more strategic as a product manager. All right, Dave, I want us to move into rallying the whole org. Talk a little bit more about this.
Yeah, thanks, Roger. So really the last words of wisdom I can give you for today is that effective product leaders and product executives aren't just running product. They are a very valued member of the team that is aligning often conflicting resources around the
Mhm.
company, right? Because everybody's optimizing for whatever their IMBO or their key result was for that quarter, and no one is going to reach out to help you be successful in your thing. And so those of you who recognize that, good for you, right? Our job is to lean into that void, into that vacuum, and really be that person that can galvanize the rest of the team. I'll go through it quickly. There's a lot of text here, but I'll just hit a couple of quick points.
Yeah.
So in sales and marketing, everything you do with sales, everything you do in go-to-market, everything you do in sales enabling and training should go back to your segmentation model. So your sales teams understand not just what should I sell, but why am I selling this and not the other thing, right? Your commission plans, your incentive programs all have to be based on rewarding the right incentives. We don't do this by ourselves, even if we are the ones trying to drive alignment. We do this hand in glove with our sales and marketing leaders. Uh,
Right.
Circling clockwise here for engineering, of course, as I said earlier, we have to be the ones to stand in front of the fire, right? And reserve engineering, not just at annual roadmap planning, which is a once a year thing, but every quarter you true it up so that we have that precious capacity available for all the technical debt and the technical risk management things we spoke about. We have to defend them because sometimes they're not able to do it by themselves. And our job in product is to build the right thing. Our job in engineering is to build the thing right. Together, we have to lock arms and make sure that engineering is not being starved on those things that are super critical anywhere in the portfolio. With finance, again, our job as product leaders is to make sure that not just that the CEO and CFO know what we're doing and that we have really good business cases for everything and that we have a hypothesis which said, if I do this feature, right, I'm going to affect user behavior. It's going to hit our bottom line or our top line this way. It's going to move this needle on NRR or one of the unit economics a couple of minutes ago in a positive way. We have to be able to tell that story, and we have to ask the CEO and CFO especially, like what's top of mind this quarter,
Right.
right? Because the roadmap has an expiration date, which is always shorter than we'd like it to be, and we're going to be doing puts and takes against that roadmap all year long. For your customer-facing teams, I mentioned them before, whether it's implementation, customer support, customer success, this is the beating heart of our company, right? These are the people closest to our customers every day. And taking friction out of their lives, giving them the right tooling, these print money. Another super fast war story is I bought into Pendo a couple of years ago when I was still in the US. Pendo is an in-product user engagement tool, and it costs us about
Mhm.
$100,000 a year. But by using Pendo and understanding our customer journey, what our customers were doing and not doing, and where they're getting stuck in the product, we were able to save customers worth 10x that in revenue, right? So
Right.
and we got to do all kinds of things in our product, which took a real load off of our customer support team. So that was
Right.
a great, effective partnership. Operations and
David,
supply chain. Yes,
David,
Roger.
we've only got a few more minutes left, so let's hit a
Uh,
couple of the key points here, and
okay.
I'd love to move on maybe to the next slide.
Yeah. Well, just one moment, second. Then for the last, can you scroll back for a second?
Yeah, yeah.
Just for the last two, look for opportunities to take out friction. Again, even though it may be outside the comfort zone for product, we have to take out friction everywhere we can on agreements with suppliers, with legal, etc. If you do this, it will unlock a whole new level of impact for you, no matter how large your organization is. Okay, Roger, we can roll by. Thank you.
Great.
I think we hit on several of these. I won't read another long list to you,
Yeah, yeah.
but be careful about assuming everyone knows what you're doing because in a
Right.
large organization that happens exactly never. So you want to cascade things out, you want to refresh them, and it's better to have some sales guy complain, "Oh my God, why are they still talking about this?" Right? Than the sales guy not know what you're doing and what their role in it is.
It's a really
So
good point.
always err on the side of meeting with these other cross-functional teams, making sure they understand not just the what, but the why.
Right.
Don't wait to be asked or ambushed when you walk into the board meeting or when you walk into the QBR where your sales team is talking about the big deals they won and lost that quarter in Germany. You want to know what's coming before you walk into those meetings. So build these strong relationships. Thanks, Roger.
hmm Yeah. And I think we've made this point, right? But I think it's worth repeating. Draw that
Agreed.
straight line, right?
Read about unit economics, look at the work I published, look at other stuff out there. This is the key to speaking in the language that your investors value.
hmm Absolutely. All right. So I'm just going to bring, because no product side webinar week would be complete without briefly talking about how AI can help you in your day-to-day work. So just a couple thoughts here. One is for each of the things that we've been talking about, AI can be your friend in assembling the data, right? Let's pull together these results. But the thing I want to point out is this part. At the end, it's up to you. You can have the AI bring together a first pass look at what your portfolio position looks like. You can draft the scorecard. You can cluster customers. You can look at the technical risk factors, right? All of that is great and it helps speed up the process. But at the end of the day, it is your call to decide, does this data make sense? Is it providing insight? That's the key thing that I want you to take away from that. And then I think we'll probably include this in our follow-up text. Here are some prompts to actually help you be effective in building up that BCG matrix, stress testing your business case, looking at the right economics or cost savings metrics, and then using the data to actually come up with things from your quarterly business review or from your support team, the things that feed into understanding, are we addressing the ideal customer profile? Are we seeing the right technical risks? So again, these prompts will help you with that. Okay, David, let's quick 60-second wrap up because then I have a couple of announcements at the end that I want to go through.
All right, so 60 seconds, here we go. Number one is don't leave it to chance. Write it down. You know, whether it's using the scorecard Roger popped up or your own adapted version of it, understand how you're keeping tabs on all the things that it's very easy to lose track of. That's thing number one. Don't become a slave to that model because all models are going to help you directionally much more than transactionally. It's not intended to be a spreadsheet, so use it for guidance or for good questions. Number three, we are only as good in an enterprise product organization in a large company as our ability to marshal groups outside of product, right? So number three is all about being a leader that people want to follow and can subordinate some of their own seemingly more important things because they understand the big picture. Number four, unit economics. Again, even if you're not in B2B sales, understand what your investors are looking for.
Right.
You only learn that by having a close relationship with your finance team. And number five, as Roger said, here's a great place where a variety of AI tools and models can help you ask yourself the tough questions. I'm not sure if
Awesome.
that was 60 seconds, but it was close.
You were real close. That was fantastic. Thank you. All right. So I think we have time for one quick question. Again, 60 seconds, and then I'll have a couple of announcements at the end. Some things that you want to be aware of. There's even a way to win a free seat, so stay tuned for that. One question we received, what do you do with a question mark that's been stuck for 2 years and never has become a star? Right?
Few
What do
years,
you do
few
next?
years is way too long for a test, right? If we learned anything in this ever accelerating world we're in, your tests have to be done in days, weeks, and months. None of you have the longevity and the runway that we did, a generation ago or even 10 years ago. So 2 years is about a year and a half or a year and 3/4 too much time, unless you are doing a foundational pivot like we described with Netflix or Intel.
Right.
Roger, there was a question from Dean Peters also early on about acquiring a lot of products. A lot of your portfolios. Can I go back and hit that one for just a moment?
I really need to move and talk
Oh,
about
we'll take Dean's
the
question
other
offline then.
opportunities we've
Okay.
got going on here. So yeah, I just want to let you all know that you can win a free seat right now if you use your phone to scan this code. Take the quick survey. We love to hear more about you and therefore give you an opportunity to win a free seat for a course. So please point your phone at that survey, get the opportunity to enter and win. We've got some upcoming courses as well. Join us in Chicago live in order to be in person for our optimal product management course later this month. Next webinar, Ryan Cantwell and Kenny Kranzler will come together and talk about running better empathy interviews with AI. Check that out. That will be in only 13 days from now. So check that opportunity out. Will be a great webinar on something where people think empathy interview, that's a person-to-person thing. I don't need AI. Well, tune in, find out more about how AI can help you. And then Check out our upcoming course schedules. Like I said, we've got Dean Peters, who will be live in Chicago. I'll be online for your optimal product management course in early September. So check it out using these QR codes. I want to thank David Nash for bringing his valuable insights and experience on the topic that we don't talk enough about, portfolio management, thinking about an entire group of products, not just individual products. Great conversation, David. Thank you so much.
Well, thanks, Roger, and the rest of our product side family. And for anyone else whose question we didn't get to today, just hit us up on LinkedIn and we'll be sure to keep the conversation alive.
Fantastic. All right. Thanks, everybody. Have a great day. See you later.